I've been pretty clear. I've been lightening exposure significantly, cutting basically all the positions that I have to some degree, except Allergan. I haven't really cut that just because I think it's a safe haven. But I've cut Microsoft, particularly in the tax accounts. I just think we've seen this this valuation extension, which I'm uncomfortable with, and we can justify it any way we want.
Well, you feel like we're at a tipping point? I mean, that's why you're selling. Joe's making some sales in his portfolio as well.
Yeah, look, I started doing it a few weeks ago. I mean, look, Noah didn't wait to build the ark till it started to rain. He did in advance of it. So I just said, look, I've got these trading positions. I've got my high conviction ideas. I'm going to start selling the trading positions. I've gotten rid of all of them pretty much. So Microsoft I sold just because I thought it was overvalued. So in terms of a tipping point, yes, I've been more aggressive on where yields are going than where they are. Rick Reeder had a phenomenal call at 280. He said supply's coming on. We'll get to 3.25. We're there. He's been right, and he's got the best vantage point. But I still think we go higher. And that if you rely on past cycles, you're making a mistake because there's no playbook for this whatsoever. I still think the Fed has to go a long way, and that inflation is burgeoning. Even though we didn't see it today, we will see it.
Is that, Pete, what this is about? Is this all about the Fed? Fed fears?
I would say that it's a big portion of it. And then throw in tariffs, throw in the fact that we're moving towards earnings season. There's a lot of different things going on right now, Scott, I think, that are affecting people. But the high multiple names are the ones that are absolutely getting crushed, right? I mean, depending on where you want to look. But, I mean, look at what's gone on in Amazon. Look at some of these names, Netflix, Amazon, Tesla, some of those names that are absolutely getting hammered. And it's because when people start saying, hey, look, I got to look around. Now, I don't necessarily disagree with what Steve was talking about. Hey, I lightened up in Microsoft. I think Microsoft's one of those names where I look at it and say, you know what, that's a name where I see an opportunity.
But you get an idea sort of where sentiment is around tech. It's all of those names.
Yes.
You went down the list: Amazon, eBay, Netflix. It's Snap. Netflix, by the way, is in bear market.
Yeah.
Right,
yeah.
Down more than 20%.
Right, significant selling in the names that have these incredible multiples. I mean, I would say that absolutely dominates versus the names that don't have those kind of multiples. They actually are the names that we talk about when we say value with growth. I'm talking about the Apples of the world and the Microsofts of the world, or those kinds of names have held up better. But when the market's going down 350 points like we've seen today, for instance, and recently we've seen these sell-offs, these names are going to come down along with it, right?
Well, Kerry, maybe this sort of nasty stew, if you will, is starting to boil over. It's not just fears that Powell's maybe going to go too fast. Pete says it could be tariffs as well. Paul Richards emailing. Earnings, I think, will be fine, but has this feeling that tariffs are weighing on risk sentiment, and they're starting to show up in U.S. equities more than people are counting on.
So let's put this in perspective. We had a phenomenal quarter, right? Phenomenal quarter. And the S&P was up about 8%. Technology as a group was up 21% year to date. So do we feel that the market was cheap and going higher from that level? It's hard to make that case. It's easier to make the case that it's time for there to be some profit taking, some selling, and the group that one would expect people to sell are those that have the highest multiples, that have had the best run, have had the best earnings growth, in fact. So I don't find this so startling.
Are we worried that earnings aren't going to live up to what the expectations are? I mean, why would you have mass selling into an earnings season where you still think the earnings are going to be pretty good?
Because there's often selling in September, and so now they're selling in October. And yes, we're having the Fed raise rates, and there are some concerns, right? China and tariffs. There are reasons to be worried. Is the fear about interest rates a little overplayed right now? Yeah, you can make a strong case that it is, and I would. So I take this as the normal progression of the year. We're still up 8% on the S&P. I still feel that we can have a good year, that we settle down, and that a month from now we can say things are better.